The average age of a first-time buyer in the UK is now 34. In 1990, it was 27. In one generation, buying your first home went from something you did in your mid-20s to something most people spend the better part of their 30s working toward. Not because people stopped wanting it, not because they started spending recklessly, because house prices have grown faster than wages for 30 consecutive years. Because deposits have got bigger. Because the system got harder. And on top of all of that, nobody tells you how it actually works. The mortgage process, the deposit, the schemes, the costs nobody mentions until you're already committed. Most first-time buyers find out by making expensive mistakes. This video is the guide I wish someone had handed me before I started. The complete, honest, no-nonsense first-time buyer survival guide for the UK and the US. Let's get into it. Buying your first home is the biggest financial transaction most people will ever make, and it is also the one most people go into with the least preparation. In this video we're covering how much you actually need to save and what the real costs are beyond the deposit, how mortgages work and what lenders actually look at, the government schemes in the UK and US that most first-time buyers don't know exist, the 5 mistakes that cost first-time buyers thousands, and the step-by-step process from zero savings to keys in hand. This is the video that demystifies the whole thing. Let's go.
Let's start with the number everyone asks first. How much do I need to save? The honest answer is more than the deposit, significantly more. And most first-time buyer content stops at the deposit figure. This video won't. The deposit. In the UK, the minimum deposit for most mortgage products is 5% of the purchase price. On a £250,000 home, the UK average for a first-time buyer, that is £12,500. At 10%, it's £25,000. The larger your deposit, the better your mortgage rate. A 10% deposit typically unlocks meaningfully better deals than 5%. A 15% or 20% deposit unlocks the best rates available. In the US, the minimum for an FA loan is 3.5% of the purchase price with a qualifying credit score. Conventional loan minimums are typically 5% to 20% depending on the lender. On a $3 lakh home, roughly the US median for first-time buyers, a 10% deposit is $30,000. But the deposit is only part of what you need. The costs people forget, solicitor or conveyancing fees in the UK, £1,000 to £2,500. In the US, closing costs typically run 2% to 5% of the loan value on a $300,000 home. That is $6,000 to $15,000. Survey costs in the UK, £400 to £1,500 depending on the level of survey. Never skip the survey. Stamp duty in the UK. Currently, first-time buyers pay no stamp duty on properties up to £425,000 until March 2025, after which the threshold drops to £300,000. Check the current rules at the time you are buying. Moving costs, initial furnishing, and the inevitable things that need fixing the moment you get the keys, budget £2,000 to £5,000 minimum. The real number to save is your deposit plus a buffer of at least £5,000 to £10,000 on top. Anyone who tells you otherwise has either forgotten what buying a home actually costs or has never done it. Most first-time buyers think getting a mortgage is about having a big enough deposit. It isn't. It's about 3 things: your deposit, your income, and your credit profile. All 3 matter. Weakness in any one of them can cost you the deal or push your rate significantly higher. How much can you borrow? In the UK, most lenders will offer between 4 and 4.5 times your annual income. On a £35,000 salary, that is £140,000 to £157,500. Joint applications combine incomes. Some specialist lenders will stretch to 5 or 5.5 times income for certain professions or higher earners, but these are not the standard. In the US, lenders typically look for your total monthly debt payments to be below 43% of your gross monthly income. This is called your debt-to-income ratio, and it is a hard limit for most loan types. Fixed versus variable rate. A fixed-rate mortgage locks your interest rate for a set period, typically 2, 3, or 5 years in the UK, and 15 or 30 years in the US. Your monthly payment is predictable. For a first-time buyer in an uncertain rate environment, a fixed rate gives you certainty and should be the default choice. Use a mortgage broker, not just your bank. A whole-of-market broker has access to deals your bank will never show you and can often find significantly better rates. In the UK, brokers like L&C, Habito, and Trussell work on a no-fee basis paid by the lender. In the US, a mortgage broker or HUD-approved housing counselor can help you navigate FA, VA, and conventional loan options. This is one of the highest value free services most first-time buyers never use.
Both the UK and US governments have created schemes specifically designed to help first-time buyers. Most people don't know all of them. Some of them are genuinely excellent. In the UK, Lifetime ISA. If you're between 18 and 39, you can save up to £4,000 per year, and the government adds a 25% bonus up to £1,000 per year completely free. That bonus compounds year on year. If you start at 25 and save the maximum every year until your first purchase, the government will have contributed tens of thousands of pounds toward your deposit. This is the best first-time buyer tool in the UK, and it is significantly underused. Shared ownership. You buy a share of a property, typically 25% to 75%, and pay rent on the remainder. Lower deposit required. You can staircase up to full ownership over time. Not right for everyone, but worth understanding as an option. First Home Scheme. Eligible first-time buyers can purchase certain new-build homes at a discount of at least 30% below market value, subject to income caps and local authority criteria. In the U.S., FA loans. Federal Housing Administration loans allow first-time buyers to purchase with as little as 3.5% down with a credit score of 580 or above. More accessible than conventional loans for buyers with limited savings or imperfect credit. Down payment assistance programs. Every U.S. state has at least one, and many have multiple. These are grants and low-interest loans specifically for first-time buyers covering part or all of the down payment. Most people have never heard of them. Search down payment assistance right now. Let's map the actual process, because the biggest source of first-time buyer anxiety is not knowing what comes next. Step 1. Sort your credit profile. Before you do anything else, check your credit file on all 3 agencies, register on the electoral roll, reduce your credit card utilization. We covered this in full in our credit score video link in the description. Your credit profile directly affects both your mortgage approval and your interest rate. Fix it first. Step 2. Open a Lifetime ISA if you're in the UK and under 40. Start putting money in immediately. The government bonus is paid annually. Every year you wait is a year of free money you don't get back. Step 3. Get a mortgage in principle before you start viewing. A mortgage in principle is a conditional agreement from a lender stating how much they are willing to lend you. It costs nothing, takes under an hour online, and shows estate agents and sellers that you are a serious buyer. Without one, you will be deprioritized in competitive markets. Step 4. Choose your broker, not your bank. Brief 2 or 3 brokers. Compare their recommendations. Use the broker who shows you the widest range of options. Step 5. Make your offer. Once accepted, instruct a solicitor immediately. Commission a survey, never skip it. Your solicitor handles the legal process, while your broker finalizes the mortgage offer. Step 6. Exchange and completion. Exchange of contracts makes the sale legally binding. Completion is the day you get the keys. Between offer and completion typically takes 8 to 16 weeks in the UK and 30 to 60 days in the US. 6 steps. Months of work, and keys in your hand at the end of it.
5 mistakes. All of them are common, all of them expensive. Mistake 1. Skipping the survey. A basic valuation is not a survey. It does not check the condition of the property. A homebuyer survey or full structural survey costs £400 to £1,500. Discovering a structural problem after completion can cost tens of thousands. Pay for the survey, every time. Mistake 2. Not shopping around for a mortgage. The first offer you receive is almost never the best offer available. A whole-of-market broker exists specifically to find you better. Use one. Mistake 3. Underestimating the timeline. From offer accepted to keys typically takes 3 to 4 months in the UK. Arranging your finances, notice period, and life around a 2-month assumption is one of the most common and most stressful first-time buyer errors. Mistake 4. Buying at the top of your borrowing capacity. Being approved for £250,000 does not mean buying a £250,000 home is sensible. Interest rates change, circumstances change. Leave yourself financial headroom. A mortgage you can comfortably afford at 6% interest is a better purchase than one that breaks you at 5%. Mistake 5. Not getting a mortgage in principle before making offers. Without it, you are a less credible buyer. In competitive markets, an offer without a mortgage in principle is routinely deprioritized or rejected outright. Buying your first home is harder than it was for the generation before you. That is a fact, and it is not your fault. But it is also still possible. With the right deposit target, the right scheme, the right mortgage, a broker instead of just a bank, and a survey you never skip, it is possible. And now you know exactly how it works. The average first-time buyer age is 34. You can get there sooner, but only if you start now. Now drop a comment right now and tell me where you are on this journey. Are you saving for a deposit? Already looking? Or is buying still something that feels impossibly far away? I want to know. I read every single comment on this channel, and your answer is going to directly shape the content I make next. Where are you right now? Tell me. If this helps someone who's been feeling like home ownership is out of reach, share it with them. Because the information gap is part of what makes it feel impossible. This video closes that gap. I'm the Skint Investor. New video every week. See you then.